With the election results and the Fed's latest rate cuts, investors have a lot more visibility going into the final stretch of the year. And one of the winners being cryptocurrencies as individual investors buy into the crypto enthusiasm. Yet a blanket of caution is in place about recent market events, according to Investopedia's most recent survey of retail investor sentiment. For more on this, let's get to Investopedia Editor-in-Chief Caleb Silver. Caleb, always great to see you on set.
Good to be here with you. Thanks for having me.
So we always look to you to get a read, individual investors, how they're feeling. What are you seeing and hearing right now?
Yeah, so we do a bi-monthly survey of our newsletter readers. It goes out to a lot of people, and we ask them, how are you feeling? Bullish, bearish? What are you most fearful of? Where are the bubbles? How would certain policies impact you? And they have been feeling bullish and pretty optimistic, I'd say. Over 69% are either optimistic or cautiously optimistic. But believe it or not, that's down about 9 percentage points since the last time we surveyed them in October. I think they've seen the rise in assets. I think they see the visibility now on what the next administration looks like and what those policies are, and we've come pretty far pretty fast. There's a little bit of reckoning going on among our readers right now who are all individual self-directed investors.
It's hard to, you're trying to parse this out. I think everybody is, because you have sort of what a lot of people see as the pros, Caleb, all right, tax cuts, deregulation, and then you're trying to weigh that against the trade policies. And I guess everybody's trying to make sense of this.
Yeah, so we asked them that question very specifically. What of the policies that the Trump administration has promised do you think will be the most beneficial or the most hurtful to your portfolio? Obviously, the ones that would be the most hurtful are the ones you think of, tariffs, right? They think that is going to impact their portfolios and the price they pay for goods and services. But when you ask them on the flip side, what about taxes? A lower corporate tax rate, lower income tax breaks, more income tax breaks? Obviously, that's a positive. They keep a little bit more of their money, but I think investors are caught between this. We kind of see what the future might look like, but it's still unclear about how that impacts our money, and they're not making that many changes. They may feel one way, but they're acting like they normally do.
That's what I wanted to ask you. So this is what's on their radar. Have you seen them changing what they're actually doing with their hard-earned money?
Yeah, we've seen over the last 6 months, I would say, this move towards more ETFs than individual stocks, right?
Why is that, do you think?
I think that is a caution diversification play in large part. Also, they've seen the rise of some of the indexes or some of the popular ETFs, and they want to be a part of that. But it became a little bit harder to be a stock picker after the rise of some of these really popular stocks, which, by the way, are on their top 10 list of their favorite stocks. So catching NVIDIA at the right time, capturing a super microcomputer at the right time seemed a little bit harder. So the move towards ETFs is something that we've been noticing in the past 6 months. But what we always ask them this question: what would you do with an extra 10 grand if you had it? We give them a bunch of options.
What do they say?
ETFs, which tells you that they're still kind of cautiously approaching the market, buying every 2 weeks through their Roth IRAs or their 401ks.
How about cryptocurrencies? How much on the radar is that?
Oh, it's on the radar. And we always ask them about cryptocurrency, how many people have it. Usually that number's around 8 to 10%. This went up as high as 25% in the last survey.
That's a big jump.
That's a big jump.
What explains that?
I think price explains that. Also, they see the crypto environment being a lot more favorable towards crypto hodlers. They've heard President Trump promising to make America the crypto capital of the world. They've also heard about less regulation, maybe no more Gary Gensler at the SEC. That makes them bullish. Plus, there's retail products now.
Do you have a line of sight when you do these surveys, Caleb, into like who the demo is exactly? I don't know, man, woman, socioeconomically. What is it?
It's us.
It is.
It's us, but it's investors, individual investors, about 35 to about 75, 80. We got some young people there, but the responders to our survey are active investors who are, in many cases, are self-directed and like putting money to work. So they're very sensitive to the movements in the market and very transparent about what they do. But if you look at their top 10 holdings, it looks just like the NASDAQ 100, just like the S&P 500 in a lot of cases. And then we ask them, what stock would you buy and hold for the next 10 years? Take a wild guess on what it is.
Let me guess. Could it rhyme with Blackwell?
Yeah, well, it has a Blackwell product, and it's reporting earnings this Wednesday. So NVIDIA tops that list, but there's always some interesting ones on that list that come in and out. The Trump media company came in for the first time, not into the top 10, but it broke the top 25. But you see where people are putting their money. Palantir also cracking the top 10 for the first time in about 4 years of doing this.
Interesting, okay, but you've been watching the markets a long time. What do you make of where we are? And it feels like we've taken we had this big jump off the Trump win. Now we've kind of taken a bit of a breather, and people People trying to figure out where we're headed.
Yeah.
We have, a lot of bulls on the show, and I get what they're saying. The economy looks resilient, earnings growth looks decent, and they focus on Trump's pro-growth policies. But you're a pro. What do you see?
I see anytime that 10-year yield gets anywhere near 4.5%, you got choices to make, a lot of choices to make. And I don't think interest rates are going to go down as fast as the people think they are. I think inflation is going to be sticky for a while. I think we're going to be in this zone for a while. But I'm an individual investor myself. What do I do every 2 weeks? I put money into the market. I don't make big changes, and most people don't make big changes. So it's this everlasting bid, right? That just keeps kind of sending markets higher. When was the last time we saw a major dip in the market besides the other day when we had that weird currency crash?
Tell me.
Right? It was during COVID, right? It was the onset of COVID, and it lasted about 5 minutes. It's this relentless bid of putting money to work, and I think that sustains the market. I don't think people outside of us and outside of the professional investors are worrying too much about anything except I just want to keep seeing my money grow. I see my portfolio at a record high. I like the compounding that's going on. So I do think that this will be in place for a while, even though there's so much uncertainty about policy, there's so much geopolitical uncertainty there. I think unless something major happens, you're just going to see this bid happen. And I think it's kind of this slow, steady grind up and to the right. Although the next year, because there's policy uncertainty and a lot of things are going to be attempted, I think it's going to be a wild time for the markets. I expect more volatility.
All right, we'll have you back to discuss it. Caleb, thank you, my friend. Always great to see you.